Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss the K-shaped uneven recovery in the U.S. And Phil, it's really interesting. If we take a look at what stimulus has actually done for personal income, it seems as if people have thought more about saving than actually spending it.
Yeah, and I think this is one reason why not all people are rushing to get the second stimulus done. You can see from the data that with the first stimulus, personal income actually increased, even though lots of people were furloughed and let go from work. So you had an actual net change in spending that was negative, change in income that was positive. And you're right, people put it in the bank and saved it. And so what we're seeing now is as spending picks back up, that savings rate is going back down. But a lot of people are still saying we've got pretty strong savings to get us through at least the next month until we get to the election potentially. And so it's kind of put a little bit of the brakes on the need for an urgent re-stimulus.
And then if we look more into the uneven recovery in the U.S., and we've been talking about this virtually since we've started to see that recovery take place mid-April, May, that it's two very different stories in terms of where we're seeing the spending and who is recovering with jobs.
Yeah, and so this is actually a contra reason to get the stimulus done, but I guess also to make sure it's focused on the people that really need it. And so when people are talking about the K-shaped recovery, they're talking about the fact that some people are doing really well and some people are doing really bad, the two legs of the K. And you can see, we've talked about it a bunch of different times, but in the charts we're looking at today, food has done really well. Goods is actually above pre-COVID levels, but services is still well below pre-COVID levels. So anyone in the services industry is likely having a lot more trouble finding work, full employment, than people that are in the goods and food industries. Likewise, if you look at it by education, you can see that actually a lot of the people with lower education, a lot more of them were furloughed, a lot more of them have lost their jobs, and it's been much harder for them to get back to where they were pre-COVID. So you can see in all sorts of angles winners and losers, and that's why there's a need to get stimulus at least directed to the people that are most hurt by this.
Now, if we take a look at our last couple of slides here, we're looking at the search, the amount of people that are searching for coronavirus symptoms. You always kind of find the coolest charts that are out there. But even before we get into that, we have the colder weather coming in the United States. We know the risk that is. But what happens when you have college students and people from university coming home for Thanksgiving, then going back to university for Thanksgiving? I mean, there's a lot of outliers out there.
Yes, there is. And I guess looking first at what's going on with Europe, maybe that's a sign of what we potentially have to worry about, because Europe did such a good job of getting coronavirus under control that they had a relatively normal summer with quite a lot of travel. The airports were open, people were doing inter-country travel. Now we sort of look at what the result of that is, and Spain and France have got some pretty big increases in the coronavirus cases, and today we're looking at the increases in deaths. So for a long time, the uptick in cases wasn't leading to deaths because it was younger people, because the treatments are better, as we're finding in the States right now. But what we're seeing in the chart today is actually those deaths are starting to tick up. So that's concerning, especially when you look at the US data. So the US data on new cases we looked at yesterday, it's kind of hovering at around those 40,000 cases per day, which is high, but constant. What's interesting in this data is this is people searching the internet for symptoms of COVID, and it picked up in March, it picked up again in June, July when we had our second wave, and it's just started to pick up again. So potentially people are feeling sick right now, which doesn't augur well for us getting through, to your point, the colder weather when we're back indoors and more likely to be talking in air-conditioned spaces next to each other.
All right, Phil, thanks for joining us on Trade Talks.
You're welcome, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.